Going on, guys? Going to highlight another setup that I took yet again. So I'm making a couple of videos this week related to the 30-minute opening range break on the NQ. Now, for those of you guys who are in evolution traders, or those of you guys who have been just following my recent YouTube videos over the past couple of weeks, you guys know that I've been trying to be a little bit more patient off the open, especially not taking any trade setups between the first 5 and 15 minutes, preferably the first 30 minutes. So over the past couple of weeks, with sitting out the first 30 minutes of the day, able to watch a little bit more price action, watch a little bit more structure without getting caught in some of the big high volatility moves. Now, today definitely on a downtrending day, and we did open up where we were in a bit of a range for, the better portion of almost an hour. It was essentially sell the top of the range, buy the bottom of the range, do nothing in the middle. Now, there could have been I could see how a lot of traders could have gotten chopped up this morning, just simply due to the fact, especially early, the market was just going up and then coming straight back down. I mean, we were talking about getting 20, 30 moves to the upside, followed by a 20, 30 point move to the downside. With that being said, what we're going to highlight is that 30-minute opening range. Now, the black box that you see is the 30-minute opening high, the 30-minute opening low. What I have been doing is taking one mini contract. Again, make sure, just because I'm trading one mini doesn't mean you can't trade 5. Just because I'm trading one mini doesn't mean that you can't trade one micro. Make sure that the size that you're trading is adequate to your account size, your experience level, and your comfort level, okay? The setup is the setup. It doesn't matter how many contracts that you're trading. What I'm doing, again, this is what I'm doing, is I'm waiting for that range to be put in. I'm taking a look at the highs. I'm taking a look at the lows. I'm creating this black box, just using a drawing tool and just highlighting the range. And I'm taking the breakthrough of that range. Now, you can take confirmation, which means you're going to allow the range to break. You're going to allow the new low to be put in, and then you're waiting for a following candle to confirm that new low through the range. That's entirely possible as well. What you can also do is take the back test. So we break through the range, we come back into the range, get rejected at VWAP, and then once we lose the range again, you can take that setup as well. That's an entirely different setup. That's a break and retest. What I'm doing is just generating quick cash flow, especially on a Friday. Either the trade's going to work or the trade's going to lose. There's only two potential outcomes that are going to happen when you take a trade. You're going to win or you're going to lose. Now, when you win, what are you going to do? Are you going to continue to trade like a madman and keep continuing to jump into the move after you've already been out? Are you going to look to try to reverse the move, give back your profits? Or are you going to be a self-sufficient, a experienced and confident and, calm, relaxed trader? Okay. What does that mean? If you make a little cash, think about it. What have you done on the week? What are you up? What are you down? Is it going to help you get back to scratch? Is it going to help you cushion your P&L for the week? Maybe you make a hard decision to just stop trading. Again, it's Friday. Okay. We had a lot of news coming into the market open. Microsoft and the whole airlines being down because of the cloud and this, that, and the other. I don't know, right? I don't know. But anytime you get into Friday, I definitely recommend to take your foot off the gas a little bit. Maybe look for that 1 or 2 potential setups that you can make money on and then kind of calling it quits. So again, just to highlight, I'm taking the opening range. So as soon as the market opens, again, as soon as New York session opens, I'm taking that range from market open until the top of the hour. That's a 30-minute range. What I've been doing this week and a little bit of last week is as soon as we break that range, whether it be to the downside or to the upside, I'm taking the first move, okay? So when we broke the bottom of this range, the bottom of this range was sitting at 19,838. We broke this range and we went down to 19,812. So we're talking about almost 20 points here on an initial 2-minute candle. Now you can use this on a 1-minute candle. You can use this on a 2-minute candle. You can use it on a 3. You can use it on a 5. You can use it on whatever you would like. I just so happen to be using it on a 2-minute candle this week. And that's where I'm going to kind of stay until things change. So when we get this break, I'm going to go in on the first move through the lows of the 30-minute opening range. I'm going to look to get green and get out. What does that even mean? When my P&L starts to ramp up $100, $200, $300, depending on how many points it's going down, think about it. For every 5 points this goes down, I'm making $100. So it goes down 10 points, you're up to close to $200. You can then make a hard decision whether you want to continue to trade on a day or not, right? You can continue to look for other setups. Just realize that you're going to put more risk on the table, and you're going to have the potential to lose a trade where you're going to have to, either then make a decision to stop trading or continue to try to battle back. Again, I believe the more trades you take, the more opportunity there is for you to lose money. So look for that one particular setup. You could also wait for the break and then take the confirmation of the new low of that break. So again, once we break down and that candle puts in a new low, you can wait for a following candle to confirm that new low. Same things apply. So how many points are you looking for a take profit? Again, I treat these as scalps because I'm trading a mini contract. Now, if you trade micros, maybe you're trading 1 or 2 micros, you can definitely set a stop loss above the candle that breaks through the lows, put it at the top, use a previous 5-minute candle or a previous 2-minute candle if you want. You're giving yourself bigger risk in this potential situation. This candle alone was 51 points. So just think about it. If you do risk the entirety of this candle, you're going to be risking $100 per 1 micro contract. Now, in my particular situation, because I'm taking the break, there is a lot of risk involved in this particular trade when I'm trading minis. But right now, what's working for me is setting around a $250 max pain stop loss. So as soon as this breaks, I've got a bracket order in there for a take profit of 10 points on this break, and I've got a stop loss for around 250 bucks. Okay, that's what I'm doing. This week, I've also taken this trade where I'm using a 5-point take profit. So just a quick $100 trade there. Sometimes I might play 2 mini contracts. That's going to be a $200 winner on the 5 points. That's how I'm doing it. You can also trade a couple of micro contracts and try to hold for the extended move, meaning you're looking for close to 50 points. Now, again, I don't know if this initial move gave 50 points because I wasn't in that type of trade looking for that type of particular move. So let's just see how many points it actually did go down. So 19,812 down to a low of 19,774. Okay. So we're looking at over 30 points, almost 40 points worth of potential move. What you can do, and what a lot of people in evolution traders are doing, is they're taking this range, 50 points, they're cutting the range in half, 25, and they're looking for 25 points to the downside. That's also doable when you're trading micros. You can hold and allow it to move around on you and allow it to kind of work into its way if you're trading those micro contracts. So again, 30-minute opening range break. I think this is the second or third video this week that I've made on this particular entry setup that has worked. Okay, so right now in this current market environment, things can change next week, things can change Monday, things can change in a month. But as of right now, this setup is working, so we have to take advantage of it. Okay, and it's also allowing us not to get caught up in all of this early morning chop and confusion, and actually being patient and being an adult and waiting for the market to choose a direction. So notice, one trader could actually tell themselves, as long as we stay below this 30-minute opening range, I can hold it. You would still be in this trade. Okay. You can use maybe the VWAP as your max pain indicator for the change in trend. You can use a different moving average, like a 200 on a 2-minute time frame, or like a 50 on a 2-minute time frame, and then you can kind of just trail it with a faster moving average, like the 20 SMA or even a 9. Again, these are all things you need to play around with. These are all things that you need to experience yourself. These are all things you need to back test. I'm just letting you know what I'm doing that has happened to be working. Using around a $250 stop loss on one mini, looking to scalp as soon as we break that 30-minute opening range. And I'm looking for anywhere, depending on how I'm feeling, depending on the day, depending on what my previous day P&L was, I'm looking for anything between 5 and 10 points. That's it. Okay. As soon as I make those trades, and if they do manage to win, I'm seriously considering stopping out on the day. Now, I did take one more trade. I was wanting to be done after that initial trade, but I wanted to see what we did once we got back into that range and got up over the 20 SMA and into this VWAP. And do we confirm to go to the upside? Maybe I would be interested in taking a long. We got rejected. It came back down, closed below the 20 SMA, and I took another 5 points here, and that's it. I'm done. I didn't take part in this long. This paid. I didn't take part in this reversal bounce here. That also paid. I didn't take part in this short trade. That also paid. Again, so yes, I left some money on the table here, but what I'm doing is trying to protect myself. I'm trying to protect myself. I'm trying to protect my odds and my risk. And I'm trying to just continue to stack these $200, $300, $400 days and just move on. $200, $300, $400 days, move on. Same thing on the loss side. $300, $400, $500 loss, stop trading. Just keep the days rolling, keep the snowball, continuing to grow. And again, staying patient. So I hope you guys enjoyed this video. Make sure to like, comment, subscribe. I'll see all of you guys on the next one. If you guys want to sign up with Apex or Top Step, those links are down in the description box below. Get started on your evaluations today. Add more accounts to your evaluations. And if you want to trade with myself and the team, that link is also down there in the description box as well. I'll see you guys all on the next video.